Hello and welcome to another update video about AVAX. So AVAX Avalanche, I told you already in the last video that here again my focus is further to the downside. I still have that wave 5 here down there to indicate that we will, in my opinion, drop once more. It did hold quite well, to be honest, here today and yesterday in the larger sell-off that we had. Looking generally at where we come from, we can see that AVAX has to do a lot to really get into a safer haven, yeah, because at the moment we have dropped below the 88.7% FIB level of $25, and we have been below that level now for a while and pretty much are just moving sideways. Minimum AVAX would need to do, yeah, to get some more bullish momentum in is actually to move above $39 to $40 out of this range, and even then, yeah, a move above $50 would increase confidence. But really, and I mean that very honest, even though it's miles away, that wave B actually needs to be broken to indicate that the downside potential for now is over. Everything until then can easily switch down again into another move down. The problem is the chart structure, that we have moved down so fast from that level. There is a lack of support and resistance along the way, and it is just a not a chart in which I have a lot of confidence. So yeah, I explained it all in detail in previous videos, but irrespective of that, where are we in the short term? So currently what I mean here about AVAX from a chart point of view, yeah, not looking at the fundamentals, from a chart point of view, there are other projects that I would rather invest in, because this whole overall chart structure doesn't give me a lot of confidence, because it needs to move up so much to really get confidence back. However, where are we here? So there's now various possibilities. Primary expectation here remains a move to the downside. That is the case until we at least get above that 37 to $38 level, yeah. That is what we would need to do as a minimum. For now, the wave count would suggest that we have made a wave 3 to the downside. We either have finished the wave 4 or we are still in the wave 4, and there are various possibilities now, and I can tell you briefly what needs to happen for each of them so that you know what's going to happen next when this or that happens. So first of all, for me, let's talk about the two bearish scenarios. The first bearish scenario, which to be honest I think is the most likely, is that we are here in a triangle pattern. In that triangle we would not have finished wave 4 yet. That means we have not yet started the final sell-off wave down. So looking at this from an Elliott Wave point of view, we would, from the low here of that wave 3, have an A, a B, a C, a D, and we might now be in the wave E. That cannot go above $21. Well, it can, but then it's not a wave E anymore. Then we're looking here at something different. Then we probably have to move it all out and have to say, okay, wave C is somewhere here, and this is just a sub-wave of the wave C, okay? Because the wave E cannot go above the wave C. If the wave E goes above the wave A though, which it also can't do, not in a triangle, if it does that, it will invalidate the triangle. Then we need to look at something more bullish, or a different corrective pattern, but at the moment for me the triangle is the most likely. Should stay below $21. We can see the 50-day moving average coming down here, so my view would be that either now that we hit this resistance here at 1872, either here the wave E is finished, or we go a little bit higher here to that yellow, which is the 50-day moving average, at 2035, and from there then we could expect a move down here in a 5-wave move. Important for that would be to break both wave D and B lows, and now that would be around $15.90. Then the triangle is officially broken, and that is the best evidence we can get that wave E is finished, a move below $15.90. So that's the first, or the main bearish outcome here, or the primary expectation, and that is what I think is happening here. Now again, the alternative would be in the bearish variant that we've already finished wave 4 and that we are already in the sell-off, but I just don't have enough evidence for that, you know. So here the wave 1, yes, 2. We would now have to be in a wave 3, but to do that, first of all, or best evidence that we are in wave 3 would be that we break this 1590 level now. Yeah. Again, unfortunately, then we don't know if it's a triangle or a wave 3, but I guess it will be revealed based on how far down wave 3 will come. Because if wave 3 does the 1.618 extension of the wave 1, then it's pretty much clear that we've already started the sell-off exactly here. So for example, if we see that wave come down here to 1099, then it's pretty clear that this here was the wave 3, and then we know the wave 4 to the upside is coming and the wave 5 down. So looking at the wave 3 target, that would be 1099. But as you probably have realized, both bearish possibilities will lead to a very similar outcome. Now, what is the bullish one? Well, for the bullish one, we had basically this wave count in yellow. You have finished 3, moved up in 4, finished 5 down, and then check these out. Then we started here in a 1 and a 2, here another 1, 2, and we could now move up in a wave 3, but again, for that, we would need to move above, first of all, $21 and then 22. But even then, this would only be the absolute minimum requirement to be able to consider something more bullish. Then we would break out of this range, and what would be the target for that? If you see that happen, target for that would then be, would be this wave 3. Where would that land? It would have to land at $25 pretty much, $24.77, just below the 88.7% fib level. Now if we do that, so if you see the price break this $22 level and go all the way up here to the orange box, then we can consider something more bullish and that the low was already in. But bear in mind, then we only have 3 waves up, which means 1, 2, and 3. We then need a 4 retracement and a 5 to the upside. Then we have 5 waves complete, and we can be more certain that we're actually already working on the breakout here and that we indeed will see the breakout happen with a high likelihood. Now again, that could then be a corrective move up or an impulsive move up. That will then be revealed by the structure. But this is from an extension level what we need to do. Again, I think this 50-day moving average is going to push the price a little bit further down. Okay, so overall, primary expectation remains here to the downside. Hopefully you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, check out the channel membership. Thanks a lot for watching. Bye-bye. Thanks a lot for watching. Bye-bye.